Let's talk about the lock and shop home loan program. It's really more of a feature than it is a program. So the lock and shop is what it sounds like. You can lock in an interest rate and then go shop for a mortgage. That's not normal. This isn't common. So normal process, air quotes normal, is that somebody goes to find a home and they execute a contract. They then come to a lender with that executed contract, they have 123 Main Street, and then you lock in your interest rate. The lock and shop program allows you to lock in an interest rate and then go identify a home later. So the lock and shop program is really, really cool for a couple of reasons. You'd want to do this when the market's either really volatile or rates are increasing, because what this does is it locks in an interest rate for 60 or up to 90 days, locks in an interest rate so you're then immune to the market movements. So in an interest rate environment, we saw from the end of September of 2024 through the month of October into the very beginning of November, so in about a 4 to 6 week period, rates went up about 0.75%. It was wild. So rates can move dramatically. So in that instance, that would have been a fantastic program to have, and people were super excited, those who were using it. So it's a cool program. You can use it for conventional, meaning like Fannie Mae or Freddie Mac programs. You can use it for FHA, VA, and USDA. So you can use it for all the big programs. What you cannot use it for is jumbo financing or non-QM products. So if you're not sure what you have or what you're looking at, ask us. We'll be happy to let you know. But at the end of the day, you can use it for most of the, air quotes, normal programs. So the neat part about the lock and shop is that, again, it protects you from the volatility. So the folks that typically need it are one, those that think the market is going to go up. So lock it in today so you can shop for your home and maybe find something in the next 60, 90 days. Two, for those that are very budget conscious, maybe they can't qualify if rates go up, or they just need to want a certain payment to make sure they can plan accordingly. Those are really good reasons why the lock and shop would work. A lot of times they'll see somebody maybe doing a corporate relocation. So they know they're moving to a city and they got to find a home because they're going to be homeless. And so they know that they're going to find it pretty quick in that next 30, 60, 90 days. So the lock and shop program is really, really cool for those that, again, want that certainty. And when the market's either being volatile or they expect the rates to go up. As far as costs and fees, so there is no upfront cost to do this. To lock in a rate, you are going to be either taking a 60 or 90-day lock. And so that means, when you look at normal, air quotes, normal rates, right, for a 30-day lock, the 60-day is going to be about an eighth higher. So that's 0.125. And the 90 days probably about a quarter higher than the 30-day rate. So you're paying a touch higher, but that's not because of the lock and shop. That's essentially just because the longer you go out in duration, if you were to do a 6-month lock, let's say, you're going to pay a much higher rate than you were if you were to get one for the 30 days like a normal loan. So the 60-day and 90-day, there's no upfront fees. You're going to pay just a touch higher in the rate. But again, you're doing this to prevent the big swings we think that could happen if the market's being volatile. The neat part, you can do a flow down. So once you have a property identified, you got an executed contract, you got your docs in, your credit approved. If the market were to go down from where you locked, let's say by, I don't know, just quarter to 3/8 in rate, you can then do a float down. It will cost you half a point at closing. So if your loan amount is 300 grand, that'd be a $1,500 fee at closing to do the float down. So obviously, if you're going to float down your rate, we need to want to make sure, and we'll help you with that math, that paying that half point is worth it, that you're getting enough benefit from that flow down. So we'll run that math for you, but it's a cool program. So if you or someone you know wants to just lock in, have that certainty, and be able to go find the home after you lock, this is a cool and wonderful program. As always, if you have questions, reach out to the Mortgage Mark team, because when you think mortgage, think Mark.